Ladies and gentlemen, good afternoon. I fully appreciate that this is not the easiest panel. The time being straight after the lunch does not make it the easiest, but I can tell you it is one of the most interesting ones. And I will use the quote of the Minister, Mr. Hatzidakis, that the robustness of the Greek banking system is one of the 4 focus areas and priorities of the Greek government. Now, I think we will all agree that over the last few years, we have seen a tremendous progress in the Greek banking system. We passed from a period of remarkable losses to a period of remarkable profitability this year, from a period of big stress on asset quality and high NPLs to a period of single-digit NPE ratios, from a period of stressed liquidity to a period of ample liquidity, and so on and so forth. During this period, the Greek banks implemented large transformation programs, focusing primarily on digital transformation, on client centricity, on cost optimization, bringing them to this new era that we will discuss today with our esteemed panelists in this great panel that I will introduce you shortly now. So on my left, Ms. Eleni Vrettou is the CEO of Attica Bank. On her left, Mr. Georgios Zanias is the chairman of the board of directors of Eurobank. To his left, Ms. Elizabeth McCaul is a member of the Supervisory Board of European Central Bank. Then Mr. Georgios Zavvos, the president and chairman of Hellenic Development Bank. And on the left, Mr. Christodoulou, the CFO of National Bank of Greece. So, Mr. Zanias, I will start with you, as you have a couple of roles. Other than a chairman of the board of Eurobank, you're also a professor at the Athens University of Economics and Business. You have also been an ex-minister of Finance. So from this hat, maybe the first question, how do you see overall the macro environment in which Greek banks operate? What does this environment mean for the Greek banks now? But also, what is the outlook of this macro environment for the banking system?
Mr. Papadimitriou, thank you very much, and I'm very glad that I was invited to this Capital Link and this session. Well, we heard the minister earlier, so we're going to say similar things, I suppose, with Mr. Hatzidakis. Let me start by saying that I've been coming to this event for many years, including the hard years of the crisis. And I'm very happy, really, that today I can say that we are on a different phase compared to our European partners in the Eurozone. In fact, in a better phase. Until now, we were on a worse phase. And I will explain what I mean by this. During 2020, 2021 and 22, the Greek GDP increased by more than 14% in 2 years. And now the European Commission predicts that this year and the following 2, the average growth rate will be 2.3% per annum. Now, when in the Eurozone, the figure is 1.1, so it's more than double in Greece. This is really happening for the first time after some couple of decades, I would say. So I think that there are a number of reasons for that, really, and I will name some of them, the generic reasons. Why Greece, in the medium term, has very good prospects, in fact, better than the average of the Eurozone. One thing is that during the long crisis years and the economic programs, a large number of reforms were implemented. We have now a sustainable pension system, we have a very low unit labor cost, we have the most flexible labor market in Europe, etc. So all this helped. Then, during this crisis, when we lost 27% of our GDP, as it is natural, a lot of investment opportunities emerge. If we add to these investment opportunities the huge investment program that is financed by the European Union resources, about 80 billion or so, then this shows what the prospects medium term will be. Of course, there are other things that are happening. One thing is that we have political stability in Greece. We have elections after 3.5 years with a pro-market government now in place, which improves credibility of the country and activates all these reforms that have taken place and the opportunities that exist in Greece. Now, the thing is that I was in the Eurogroup for a number of years, and they used to call us special case country. This is no longer true, and I think the event that officially ends that period is the return to the investment grade by almost everybody except Moody's so far. So the outlook medium term is very good. I can confirm really what Mr. Tzadakis said from my side also. Now, as they say, if the country does well, the banks also are doing well. And the reverse is also true, that you need good banks in order to fund growth. Now, the thing is that Greek banks have dealt with legacy problems. There are some NPEs remaining, about 5% or so. Don't forget, there were 50% some time ago. And now, after having done with the legacy problems, we concentrate more on performance and growth. The thing is that you can see in performance, you can see how much the capital is. My bank has set 17%, almost 20% total capital. We are highly profitable. We have lots of liquidity, which was very scarce at that time. You know, loan to deposit is only 75%. And, you know, cost to income in Greek banks is about 35%. So these are really very good performance indicators for the Greek banks. Now, I will tell you another number. Another number is that at this moment, the loans of the Greek banking system are about 60% of GDP only. Before the crisis, it was double that figure. In Portugal, which is a similar country, it is 110% of GDP. So you can imagine how much, you know, the scope ahead for expansion exists, and this will happen, you know, because there are a significant component of the Greek economy is not restructured yet. It's in the services. As this is being restructured, the growth continues, you know, the demand for loans also will increase. So this is what is happening, and 2 words only about my bank, which pays for the ticket also to come here, is that we were the first ones to lead the way for the reduction of the NPEs, the first privatized, and the most diversified bank in Greece, with about 1/3 of our profits coming from abroad. So I think it's overall positive prospects. Thank you.
Super. And maybe a follow-up question, if you allow me, on your property as the chairman of the board of directors of one of the systemic banks. Corporate governance is one of the areas that institutional investors really, you know, focus on. How would you view the level of corporate governance of Greek banks against European peers, and what would you say is the progress that you have seen on that aspect over the last few years?
Yes, I would tell you, I have served during the last 10 years as the chairman of 2 Greek banks, so I think I have a quite good idea of what is happening there. The thing is that all the European banks really changed their corporate governance after the financial crisis. In Greece, the governance of the Greek banks became part of the economic programs also that we had to implement. So the Troika and the IMF, together with all the other reforms that they're trying to impose to Greece, was also the corporate governance things. A lot was imported at that time, and under agreement that we had to implement that. But also the Greek banks were seeing that, you know, in order to avoid all the problems of the past, we have to improve. Now you see, if you look at the boards of the Greek banks, you know, half of them or more than that are foreigners, really. Europeans who bring the European culture into the country. Then, after all these reforms that took place and the control functions really, which now have nothing, they are much better than they used to be before the crisis. Then the SSM took over. The SSM is trying really to harmonize the governance structures across Europe. In fact, in the reports that we receive every year, the examination that they have for the Greek banks, the SREP, one of the 4 pillars is corporate governance. So I think that we are in a position to assure of the corporate governance, our investors. After all, our institutional investors, at least in the fully private Greek banks, more than 90% of institutional investors are foreigners. And the foreigners are watching, and we take very good care of that. Thank you.
Thank you, Mr. Zanias. And Mr. Christodoulou, turning on the right part of the table, first of all, congratulations on the recent very successful placement of 22% of the bank shares. It was, I understand, hugely oversubscribed. So my question would be linked to that. And we have seen during the same period the UniCredit deal with Alpha Bank. So there seems to be some great interest on Greek banks' share. What do you think drives this interest for Greek banks' shares, and do you see it extending in the future?
Thanks for the question, George. I think the Minister, Mr. Zanias, mentioned some of the enablers, the key enablers that drove to this indeed successful transaction for MBG. So I would identify 3 different areas that are really helping the banking institutions go forward, and MBG with the placement. First of all is the macro environment in Greece, and in general the Greek story, which is a very attractive one. So everybody knows that Greece is coming out of a prolonged crisis, and the Greek economy now is on a path of sustainable growth, with our GDP in the past few years, as well as in the next couple of years, estimated at over 2%, comfortably outperforming the Eurozone average, which is it's a milestone for investors to have as a point of reference. Then the fundamentals of the Greek economy are also very strong. We've heard today about political stability and a government focused on reforms and a momentum on that direction. We have a remarkable fiscal rebalancing and debt sustainability outlook, and all this, of course, was ratified by the investment grade that we've seen during autumn happening from 3 different agencies. We've heard the Minister talk about the FDI being at record levels for many years. Our corporates are with very strong balance sheets, with their profitability being at the highest levels they've been for over a decade now, and with a low leverage that could support expansion plans going forward. And also households. Households benefit from the sustainable employment growth, from the increase in real disposable income, despite the inflation levels that we see currently. So overall, the Greek economy as a whole is one of the levers. The second one is the banking system itself. We have banks that are well capitalized, banks that are highly liquid, and more or less all the banks have managed to cleanse their balance sheets. We also heard Mr. Zanias say about the underpenetrated loan, let's say, environment in Greece. Less than 60% as a percentage of GDP in terms of performing loans, while the rest of Europe is currently at around 100%. That's a margin for us to catch up. And for that to happen, obviously FDI is required, but also investment and financing from the banks. Also, the banks currently are enjoying their restored profitability, of course, on the back of the increased rate environment. And gradually, I think we are in a position to start returning capital to our shareholders, which is also something that attracts foreign investment. I think the last point I want to make is for MBG specifically. Obviously, our investors have rewarded the bank for all the progress that has made in the last 4 to 5 years. I think our commitment towards our ongoing transformation, improving the customer experience, and of course, credibility in delivering results is what also attracted them in this placement transaction. And I will just make a reference to a few numbers that we managed to deliver, which I think speak well for the bank itself. First of all, the cleansing of our balance sheet. With point of reference September 2023 numbers, our NP position is at 3.5%. I think we are at the point that we wanted to be in 2025, so 2 years ahead of plan. We've managed to reduce our NP levels with our cash coverage at 100%. So effectively, what NPs we have left on the balance sheet are covered from provisions. I have to thank Mr. Zavvos on my right, because he was one of the pioneers in this respect with the Hercules program, because all the banks have utilized it to speed up and accelerate the cleansing of the balance sheets. Another element that I think bodes well for MBG is the healthy and consistent loan growth that we have exhibited over the years. Again, with the September numbers, we are over $1 billion year-on-year up on our performing loan book. And given the fundamentals of the economy, I think the environment is there for us to grow even further. Liquidity. We maintain one of the top liquidity profiles even compared to European peers, with our LCR ratio at 250% and our loan-to-deposit ratio at 56%. So everybody can see that we are well positioned to fund the economy going forward. And another thing to add about liquidity is that currently where the ECB rates are, it's a key driver for profitability as well. Second to none, of course, is also our capital position. We now stand with a core tier 1 capital ratio of 18%, again amongst the highest compared to European peers. We've managed to generate about 220 basis points of capital in the first 9 months of the year. So that's a guarantee for what's also coming in the future. And of course, capitalizing on our distinct balance sheet and of course on the transformational efforts that we are carrying out at the moment, we have our increasing profitability. We've managed to nearly manage €1 billion of profits for the 9 months, translating into a return on tangible equity of 18%, which again, comparing to European peers, it's amongst the highest in the region. And lastly, I think the signaling of the remuneration to shareholders, the banks and NBG in specific, starting in the year 2024 with dividends and other means of returning capital to the shareholder, is something very strong as well that attracted, I believe, funds to the placement. So all these things combined led to a very successful transaction. I mean, we've shared some of the forums before talk about it, over 8 times oversubscribed with a discount that compares to none in Europe. Great investor base entering our shareholder space from many geographies. And I think the fact that we have included the Greek retail in the placement is a great success for the country as well.
Thank you very much. And talking about record profitability, right, of this 1 billion, I think the $1 million question for many investors that we discuss with is how sustainable is this level of profitability, right? A big part of that is attributed to the rising interest rate. Of course, there is transformation as well and other things driving these numbers, but there is a big NII effect behind. So how sustainable you believe is this level of profitability, and where the banks should focus in the future in anticipation of declining at some point, rates?
Yeah, indeed, this is a very nice question. It's one we get from all the investors every time we are on the road. The tightening of ECB's monetary policy from, I would say, abnormally low levels, actually negative rate levels, was a key driver of profitability, especially given that the asset side of the balance sheet of Greek banks was floating, let's say, asset base. So we benefited a lot from this policy. Now, going forward, as you said, the rates will inevitably normalize to more sustainable levels. I mean, one could argue that we could be seen operating at rate levels, let's say 150 basis points lower than we are at the moment, even a bit more. given ECB's guidance that they want to have the rates at a point, at the level where inflation will be sustainable in the area of 2% and below. Now, the banks are already implementing strategies to kind of mitigate the negative effect that the decrease in the rates will have, and obviously prevent the erosion in their NIMs from the normalization of the rates. That involves structurally hedging the balance sheet to protect, as I said, the NII. All of us have actually started to implement such strategies. And another way that we can do that is also investing in fixed rate assets, given the levels of rates we have at the moment. But as you rightly said, at the same time, we shouldn't be focused only on these, let's say, techniques to lock in the rates. We should also continue improving our business models to become more competitive and to support profitability going forward. This includes obviously the healthy credit expansion going forward, both in corporates and retail. We've talked about the FDI, the level of performing loans as a percentage of GDP, and the growth that we expect in Greece. So the fundamentals are there for the banks to finance and grow healthily going forward in terms of their loan book. We are also, going to tap on opportunities like the emerging and sizable servicer loan and collateral market. I mean, those NPs, 100 billion of NPs that left the banking system to the services is inevitably going to come back in some form, and an amount, let's say half of that, back to the banking system. So we have to be ready to finance that. Another way is to improve our fee generation capacity. Greek banks in general are laggards compared to European peers, so we have to do better in that respect. We do quite well in loan origination fees and credit-related fees in general, but on non-credit-related fees that have to do with wealth management, bank assurance products, we are not there yet. We need to become a bit more sophisticated and drive our depositors into these higher yielding products, which will also lead to fees for us. Of course, the continuing cleansing of the balance sheet will also lead to a normalization, a reduction in the cost of risk, which will be a booster to profitability as well. And lastly, I would say that investment in technology is also something that will promote digital transformation. It will increase efficiency, lower costs going forward, but at the same time, it will also improve product and service offering for our clients. So all in all, with all these tangible initiatives, I believe that profitability is sustainable going forward. And it's important for us to credibly show to the investor community that the sustainability of our returns on tangible equity will remain at high and healthy levels going forward.
Thank you, Christos. And turning now to one of the two ladies in our panel, Ms. Vrettou. You took over as the CEO of Fatica Bank around a year ago, right? The bank was reporting 40 million or more losses at Q3 of 22. Within a year, you have changed the situation and moved now to profitability, more than 15 million, if I remember correctly, profit one year later. So I would like to share a bit what has been behind this, fantastic improvement within a year in your first year in Attica Bank.
Thank you. Thank you, Mr. Papadimitriou, and thank you also to Mr. Bornozis for the kind invitation to represent the bank here today. The first thing I would like to say is that the profitability that you've seen in the 9th-month results is going to be even more impressive by year end. So I can't say more because I see Ms. Lazarakou somewhere here in the audience, but I can tell you that it's definitely sustainable for the end of the year and next year as well. So if you look strictly at the numbers, this is like the actual profitability has three components. One of them is definitely the rising interest rate environment, which has been suggested by Mr. Zanias and Mr. Christodoulou, but we're less benefiting from that versus the systemic banks. And the reason for that is because we have been deliberately among the first ones to pass the benefit of the interest rates back to the customers through some very competitive time deposits that we've offered to our client base. So this is 1/3 of the three components. The second component was a very severe cost-cutting exercise whereby we basically renegotiated every single contract that we had with suppliers with the bank. We cut many of the third-party advisors. Again, many apologies to several advisors here in the room today. We had to cut you down, people. And we basically managed to reduce significantly the cost-income ratio of the bank, which used to be something like 280% cost-income ratio. It's now around 60%, and definitely there's room to go in order to follow the example set by the systemic banks. But the third and most important component is actually that this bank is able to generate revenues now. So after the successful recapitalization back in April, where we completed a share capital increase of 473 million euros, we redeployed the balance sheet because of our capital position and the strong liquidity that we have. We have about 3 billion deposits right now and rising from our customers. And even when the European banks had liquidity problems, we had increasing liquidity as a bank. We basically managed to extend this balance sheet back to our customers. So we, in the 10th-month period that we have in 2023, we have a positive, healthy credit expansion of around 250 million euros. This is actually quite impressive because this is generally a trend that in the Greek banking sector, there's minimum credit expansion. So you would ask me naturally, why would a client actually come to Attica Bank versus one of the systemic banks? And the reason why a customer chooses us is because we can be faster. We can be faster because we are a smaller bank, we have agility, and we care about every single customer we have because they're very valuable and important to us. So these are actually the financing analysis. But if you look, there are several underlying drivers, the soft drivers, which are more important. This is what drives actually this change in numbers. The first ones are people. So we managed to attract very early on good talent who have joined the bank. They have taken the bet around transforming this bank altogether. We have managed to attract private investment. So, we have a private investor now who aligns their interests with actually the good performance of the bank and not making profits around non-performing loans or other side benefits. We managed to get rid of different sorts of interventions. So it's no secret that this bank used to be an object of political intervention, non-transparency, and other sort of means. We now have instilled a very strict corporate governance framework. We have a very strong board of directors, which has changed altogether since April, with technocrats and people who have long experience in both systemic and international banks. We have also changed the culture of the bank. And I think this is the most important thing. From the bottom of the bank until the board of the directors and the management, we have people who actually want to see this bank operating as a proper banking player. And I'd like to say that we're actually huge admirers of what has happened in the systemic banks. We feel that they also benefit from a little bit competition because they can also improve their service versus the clients that we all want to achieve. We can also be a solution for the clients that are in the services, as Mr. Christodoulou said, so we can offer them a viable solution to re-perform and come back to the banking system. But more importantly, we actually have followed their example around have they cleaned up, have they become stronger players, and this is the path that we want to follow ourselves as well.
Thank you, and I'm looking on the clock and I'm getting a bit anxious, but I want a second question. We have heard the minister discussing about the need for a fifth pillar, right? And we have heard even the Prime Minister discussing about it. So where do we stand on this matter as you're one of the candidates for building this pillar? Where do we stand on that? And where do you think this bank that could emerge as a fifth pillar should focus on to compete in the Greek market? Yeah?
So I think we've touched on who the target clients are. I think basically we're looking not necessarily to compete with the systemic banks. We're looking to fill whatever gaps there are in the system and offer an alternative financing solution for our clients, for the Greek clients. And this is not at odds with what happens in other European countries. So, in every single other country, there is a challenger bank. There are a fifth and a sixth bank that offer an alternative financing solution and can be very viable. So where we stand versus the creation of the fifth banking pillar. First of all, I'd like to say that this is probably the most ambitious and challenging project that has ever happened, I think, in the Greek banking history, in the sense that, you have two banks that you need to restructure, transform, recapitalize, and merge at the same time, and then integrate at the same time as well. and attract private investors into this vehicle. So we remain very focused on this plan. So the due diligence has started. We have received the support by both main investors, so both the private investor, but also the Hellenic Financial Stability Fund, which has been an integral part of driving this whole discussion. We are in the process of finalizing the business plan of the combined new entity. Together with the support of the government, and again, I'd like to thank myself as well, Mr. Zavvos, for the inception of Hercules. We now have Hercules Program Part 3, which is no secret that it is intended mainly for the less systemic institutions to clean up as well. So the intention is that we will go into a single-digit NP level, or something that will be equally good, if not single-digit, then something that can be low and investable. And at the same time, hopefully, during the first quarter of 2024, we will be able also to submit the plan for merger between the two institutions. As I said, it's very ambitious, but because this is a priority, I think, not because the government has said it, the minister or the Bank of Greece, but because actually the economy needs this new institution to be healthy and in operation, we are very much focused in order to achieve this in this timeline that I have described.
Thank you. And Mr. Zavvos, turning to you, allow me to start with a bit of a personal question for a quick commentary. We heard a couple of people on the panel thanking you for your being the brain behind the Hercules securitization program. So the question is, when you were designing this program a couple of years ago, would you ever believe that in such a short period of time we will move from tenths of NPL ratios to a single digit in the Greek market?
Yeah, I recall this time, I was here, many times with many people with doubts. And I recall also that a few months ago, the Prime Minister said that many might have doubted 4 years ago that Greece would be capable of reducing the exorbitant level of banks' NPLs. I also recall what happened here exactly day by day 4 years ago when I announced to international investors the Hercules bill coming to the Parliament. And I remember that I had to leave next day, the day after, to fly to Athens to defend it into the Parliament. I'm really proud for what we did at that time. That's, I think, it's an achievement in terms that, Hercules has been an impressive, implementing within an impressive time frame of even less than 2 years. The results, I would say, they are kind of nothing short of staggering, with a remarkable reduction from 46% of NPLs the day I took office and bringing down, now to a single-digit number. Hercules, as now we know, has rescued the Greek banking system from turmoil, but also has become, I would say, one of the cornerstones of Greece's virtuous cycle. Bloomberg last April also aptly stated that the magnitude of the improvement is unsurpassed anywhere by a banking system. All these accomplishments had a profound and, I would say, positive impact on Greek banks, propelling them towards a profitability cycle, also growth, after 13 years of hardship. Now, the Hercules has been pivotal in facilitating the upgrades of the Greek banks, of the Greek economy, and has paved, as we know, the way to the acquisition, to the return to the investment grade. Attainment of investment grade is really a remarkable success story that's been fueled by unwavering determination and political resolve of the Kyriakos Mitsotakis government. It's also a culmination of years of hard work of the Greek people. And I wanted really to pay tribute to my European colleagues, such as Mrs. McCaul of the ECB, and her SSM president, my good friend Andrea Enria, for their unfailing and unwavering support throughout the turbulent journey of that time. The rapid reduction of the NPLs had made significant contribution, I would say, to financial stability. It allowed banks to promptly participate in the channeling of the RRF funds. Also, it enabled banks, to move to share capital increases, and now for the HFSF to divest from several of these systemic banks. Hercules securitization scheme has been a real transformative journey story for Greece and its banks through the cleaning of the balance sheets, enhance investor confidence, and also boosting growth. Hercules, as we know, has been successful because the government has extended twice, and one most recently. It has been praised, we know well, by international financial institutions, and I would say it serves as a valuable example for the EU of how a market-based mechanism solution like securitization should be at the heart of deepening the capital markets union. And I do believe that securitization really can be the turbocharger for financing Europe's and Greece's great needs for meeting the targets, especially of green and energy transition. So those are, I think, some of the things we can take with us.
Thank you. And a bit more business question on something that you focus on as Hellenic Development Bank. SMEs are often referenced as the backbone of the Greek economy. I mean, the vast majority of our companies are SMEs in reality. Where do you see opportunities in relation to Greek banks when it comes to financing this SME segment? It's an interesting, but it has proved to be kind of challenging as well over the years for Greek banks.
You are very right, because from the one side, everybody knows, we even say that the Greek SMEs is the most crucial component of the country's economy, which accounts almost 99% of all Greek companies, which employ more or less around 85, of the workforce. This is a diverse segment, encompasses industries from manufacturing, agriculture, retail, services, and presents a vast untapped market. Still, and here's the problem, despite its economic significance, the SMEs face a challenge, in accessing and securing finance from the traditional commercial banks, and that is due to the perceived risks, collateral requirements, and high interest rates. And this is exactly where the HDB, the Hellenic Development Bank, comes in and plays a catalytic role in alleviating, these obstacles and empowers SMEs, to thrive. What we do, we have a comprehensive risk mitigation tools and tailor financial solutions, and we effectively, I think, we unlock a potential for the SMEs. There are two tools, guarantee schemes, co-finance loans, and through innovative financial instruments, I think we will significantly reduce interest rates for the SMEs. By shouldering of this portion of the risk that's associated with the SMEs, I think we help the SMEs to expand. And I would say that Hellenic Development Bank leaves an important impact, because it plays a role in leveraging from one side Greek banks' money and encourage them then now to strategically position themselves in a catering specific needs for the SMEs. And through a very close collaboration we have with the systemic banks, try to secure a sustainable source for income for them if really they position well in this mid-future. But at the same time, the HDB plays a pivotal role in leveraging, that's important, not only the national sources, but primarily the EU funds. And here we managed to effectively absorb EU funding. And also, we have a very dynamic, synergetic relation with the European Investment Bank, and we manage, to expand our reach and enhance the ability of the Greek entrepreneurs. Also, I would like to say that one of our main focuses is green finance, because we provide loans, grants to SMEs and to individuals, through a number of important sustainable practices. We improve also through loans financial efficiency and embrace, obviously, digital transformation. Therefore, somehow what we're doing, we shape the appropriate financial instruments, and we transform the European Union funds and national funds, into loans that help transition towards green and more competitive economy. The impact we have in the economy, give an example, over the last 3 to 4 years, we managed to finance around 36,700 companies, and also giving around 45,000 loans. This has resulted to a portfolio of under management of exceeding now 9.4 billion euros. We have fostered also the creation of over 18,600 new jobs. We contribute around 7.7 billion to Greek GDP, and we have a multiplier effect that we have counted, which is therefore, for every euro we're putting, 2 euros they are coming also from the commercial banks. And therefore, we managed to have a clear, tangible impact on the Greek economy. I would like to leave you with 3 messages in concluding. Point 1 is that Hellenic Development Bank has an unwavering commitment to support the SMEs and unlock their potential and contribute to the Greek economy. Greece, we're at a turning point that we know through the important government policies, Greece embarks in a transformative journey, and we remain steadfast in our mission to create value for society and for the environment. And finally, we have seen what has happened these 4 years, the important transformative change of the Greek financial system, especially the Greek banking system, and this new recompilation of the financial system. HDB manages to position itself as an indispensable partner for the new post-crisis Greek financial landscape. So that's the 3 issues I'd like to
Thank you, Mr. Zavvos. And Mrs. McCaul, now we go to the interesting part, which is the reality check. So you shared the Greek bankers share their optimism, their enthusiasm for the prospects of the Greek banking and the results over the last year. So being the only external and also most importantly coming from the Supervisory Board of ECB, how do you view this progress of the Greek banks over the last year? And where do you think they should focus on as, over the future that the rates will start to de-escalate?
Thank you very much. And may I just give my thanks also for the invitation to be here with you all in such an important year. And I'm going to agree with you right up front about this mood of optimism that you can feel throughout this conference. It's well-founded. You spoke a few minutes ago about everyone having a lot of doubt about the ability to make certain achievements. And I have to start by saying that there is no doubt that this has been a favorable year for Greece and for its banking system. That is a fact. The country has achieved the investment grade, and there are spillover effects coming from that investment grade to the banks in terms of their ratings and also overall because of their collateral that they have. So this is a very welcome and very important market development. And then it's remarkable what has happened with the Greek banking system. The asset quality is improving. The NPL ratio of the Greek banks has declined dramatically. You said 46% when you started, 49% in 2017, and today that number is single digits. It's dropped to 8.6% for the banks that we supervise. That was in Q2, and we have an expectation that there will be a further decline in the 3rd and 4th quarters of this year. I would say I really appreciated your thanks, which go to our chair, Andrea and Ria. But may I make a little parenthetical here? Supervisors are never thanked, so this is an extraordinary moment. It's a little bit like being on the soccer field, on the football field. No one ever cheers for the goalie when he makes the save, but everybody boos when there's a problem that happens. But there's huge thanks that go to you and for the work that you have done, and a very intelligent solution with the Hercules Asset Protection Scheme. This is a very big part of the success in this picture of improving asset quality and improving the balance sheets on the banks. It's also the case that liquidity is strong. The Greek banks have a traditional business model. They remain very widely deposit funded, and that deposit base has further increased over the past year, and that's also evidenced by the low loan to deposit ratio. Profitability is improving. We've heard that message consistently today. That's due, of course, to the higher interest rates, the higher interest rate environment that we find ourselves in. The high NII is contributing positively to the interim results. We have certain market conditions that are at play here. The sharp increase, rapid increase in the interest rates, stable funding costs, and we still have a low impact, which I would say many of us had skepticism about this, but a low impact on the cost of risk. These three things together have contributed to record results in terms of the profitability of the Greek banks that we supervise, and that's net of one-offs. The foreign interest the interest of foreign investors in Greek banks is also a positive development, and the announcement of the strategic partnership between Alpha Bank and UniCredit, and the successful placement of a 22% stake owned by 𝒄𝒄𝒆𝒂𝒏𝒕𝒔 and National Bank of Greece last month. These are seeds of a very positive development that is occurring. We see that the Greek banks are benefiting very much from the co-financing of the loans at low interest rates, and that's been made available by the EU's Recovery and Resilience Fund, and that's also something that's very helpful overall for the Greek economy. Now, I wouldn't be a supervisor if I didn't turn to the second part of your question, which is, where do we want to go from here? And I think the buzzword, the message word, has to be sustainability. How do we turn this story into a sustainable story? And we need to still be able to witness the full restoration of the bank's intermediary role in the Greek economy. And there are certain things that really need to happen. I would say 5 things that need to happen for that to be the case. First of all, we have to further reduce the bad debt. The NPLs didn't go away. They still very much are in the economy. There is hardship in firms and in households. They're outside of the banking system, but they're still there. And it's important to also point out that while this has been a dramatic drop in the NPL ratios, there is still a larger share of bank loan portfolios and the NPLs in the bank loan portfolios than in the rest of the euro area. So there's more work to do that's very important in this area. Second, further strengthen capital buffers. We need to make sure that there is the ability to absorb future potential losses. We are in a very uncertain macroeconomic environment, and also we have the peculiarity of the Greek capital structure with the quality of the capital buffers with the DTC that's dependent on future profitability. So we exercise a lot of prudence in this area. Ensure that bank profitability is based on sustainable sources as we go through the business cycle, making sure that continued lending to sound investments, lending to sound investments, profitable investments, that this continues and this continues in a sound way throughout the business cycle. The last 2 I would put broadly in the category of strong governance, and I really appreciated your comments about the governance structure. There's a very important strategic role that governance framework has to foster and nurture. It's first that there be digital transformation, that some of this profitability be invested in the IT systems and the structures that run the banks. This is absolutely important in this world of technology renaissance that we're living in. And then secondly, it's essential that the Greek banks incorporate climate-related and environmental risks into their overall picture. There's an enormous opportunity for sustainability. There's an enormous financing opportunity in the transition period. We need to make sure that also the Greek banks are aligning their practices with current regulatory requirements and the supervisory expectations in this area.
And Ms. McCaul, we're out of time, but I cannot resist in a final question, given that we have the privilege to have you with us today. A bit of perspective on the wider European banking system in which Greek banks operate. What is your take as a supervisor? And do you believe there is room for cross-border consolidation that we will see in Europe over the next foreseeable future?
Yeah, as an American, I'm always making the comparisons between the European banking system and the American banking system. And if you simply look at the activity in the banking sector post-Great Financial Crisis, the consolidation that occurred in the United States compares quite dramatically against the consolidation that has occurred in Europe. And I'm very broadly of the view that the European market suffers from an overhang of overbanking. And without any, these events have to be market-driven, of course. They're not supervisory-driven. But it's the case that the overall banking sector would benefit very much from further consolidation across the board in terms of its overall profitability and the sustainability of the business models. I think this is an absolute must. I would say just overall, in the overall banking sector, we're really focused on the uncertainty in the macroeconomic environment. It's a moment, I call it sort of the triple threat. We've got the rising interest rates, inflationary pressures. We have the geopolitical situation with terrible conflict in the Middle East and the terrible war of Russia in the Ukraine. And then we still have after effects of the pandemic. And these are difficult waters to navigate. And so we're really, very focused on having the institutions be very prudent.
Thank you so much. And I guess this brings us to the end with two thank you and one apologies. Thank you to our panel members for a great discussion. Thanks to all of you for your attention, and apologies for a short overrun on our time. Thank you.